IVM.
This is a special edition of Paisa Vaisa. On this episode, we have Shalin Shah, an angel investor and founder of SPYRL Ventures, a fund focused on FinTech and Industrial IoT. This is the last of a two-part conversation. Make sure you check out the first part on the history of money and how cryptocurrencies came into existence.
Folks, welcome back to the second part of our series on cryptocurrencies. I have with me angel investor Shalin Shah, who has invested in Coinbase, which is a cryptocurrency exchange. In the first part of our series, we covered the history of money, how we moved from the barter system to paper currency and now to cryptocurrencies and how they work. In this episode, we are going to move to a very Indian-specific context. You know, where exactly does India figure in the entire in the overall market for Bitcoin? Shalin, welcome back. We've covered so much in the first episode. You know, we did the entire barter system and how cryptocurrencies came to come around. How does this impact my life here in India? Maybe we could start with the concept that you spoke to me about. You've got wallets, you've got cold storage, all those things. Like let's say that if I want to buy or sell a Bitcoin, where do I start? What do I do? What do I need to know?
Sure. So I think, today in the Indian context, there's a couple of startups that have gone after figuring out how to manage cryptocurrency.
Okay.
I think the largest in terms of volume is Zeppay. Okay. And the second is probably UnoCoin.
And these are exchanges?
And these are essentially the equivalent of exchanges.
Okay.
They are buying and selling, whether it's Ether or Bitcoin.
Right.
They are trying to create an opportunity for the average person to be able to buy them and sell them.
Okay.
And so today you would sign up on one of these sites.
Right.
You would go through similar KYC process that you would do with a bank.
Okay.
And they would open your account.
Is the KYC a self-imposed thing? Because, I had this impression that Bitcoin is this very underground, geeky, nerdy thing where I just go in and buy it and I store it somewhere in my hard drive. But when you said the word KYC, I just thought, is this, how does this work there?
Yeah, so I think while Bitcoin in itself is supposed to be decentralized and, you don't need KYC to do anything with Bitcoin, each government in every country has different processes involved with assets and with money or similar things to money, which enforces upon anything related to money to create a KYC process. And so when you're a startup, you want to stay within the confines of the law.
Right.
And so whether the blockchain or Bitcoin needs KYC, they don't have a choice with the government.
So folks, remember that. Here's how we start, right? You could download the app. You could figure out which exchange you want to buy the Bitcoin from. Download the app. You would have to give your name, email address, phone number. You would have to give your Aadhaar details. My guess is, and also your bank details, because that's how you're going to need money to buy that Bitcoin. Okay, so that's your first step. So you open an account, upload all your details, and then I think it's go after that, right?
Yeah, and then it's go. Then whatever the prevailing price that they're buying and selling it at, you're essentially buying and selling it at. Now, once you've acquired the cryptocurrency, whether it's Ether or Bitcoin,
right,
you are gonna put it into essentially a wallet.
Sure.
This is no different from, conceptually from a checking account or savings account.
Right.
The other thing that you can do instead of it being in a digital kind of warehouse is similar to like a safe in a bank.
Okay.
You can put it offline, which is generally in cold storage.
Okay.
Where they can actually kind of download it and say, look, I don't want this to be connected to anything online just because I'm afraid of hackers. I'm afraid of somebody stealing it through whatever it is. And so now this asset of mine or this currency of mine is now offline.
Right. Okay.
And that's kind of two methods of having stored cryptocurrency.
So you've got cryptocurrency, you've got an exchange, you've got a wallet, you've got a cold storage. Okay. So we've got all that part covered. Why does the value of cryptocurrency change every day? Like for me, I have 10 rupees in my pocket today, That 10 rupees is going to still buy 10 rupees tomorrow. Maybe not after a year because inflation, etc., etc. But with Bitcoin, I could buy, I think the rate today for in Indian rupees is some, 3,87,000 or something of that sort. But tomorrow it could be anything else. And these rates keep on, they keep on falling and rising pretty sharply. What exactly is the deal out there?
So if we kind of went back to our previous part when we kind of explained money, one of the things we discussed was the backing of money with some other commodity.
Right. Or a promise by a government.
Or after the, a commodity, it could be a promise.
Okay.
And so, what happens when you promise by gold, we have a bunch of issues. When you promise by governments, there's also issues. So, for example, if you go to Venezuela today or if you go to Zimbabwe,
hyperinflation.
Inflation is crazy. And so the value of the currency just loses its value very quickly.
Yeah, just to put it in perspective, I think Zimbabwe saw currencies, it saw inflation of 10,000%. Same with Venezuela, who also did a demonetization in a different way than us. But the essential point out here is that the value of the note that you have in your hand, there's no trust in that. It could just vanish with inflation or with some problems within the government. So, yeah, go on.
Yeah, just to give you that perspective from inflation just in real terms. So if you were somebody that wanted to get an apple in Zimbabwe, you would get from the bank in the morning, they actually had very large denominations, $1 billion note.
Okay.
And that $1 billion note would get you an apple.
Okay.
By the end of the day, that $1 billion note wouldn't get you anything anymore.
Wow.
And so that inflation is very large, and that's largely because of the trust in that government or the ability for that government to repay its debts.
Right.
And so that's the problem with these government-backed entities is that then you're relying on the government.
And the government's not done much to instill confidence in us with the global financial crisis and stuff like that. I get what you're saying.
Which is why I actually got very interested in cryptocurrency to begin with, which is soon after kind of the recession that we had in 2008, 2009. Most governments were essentially pumping money into their systems.
Right.
And these central banks controlled how this money was being pumped and where and how.
Right.
This was a very decentralized method to do it, and it was cross-border cryptocurrency.
Yeah. And from an Indian perspective, you didn't have the Prime Minister coming to you one fine day at 8 o'clock in the night saying that, gone, by 12 o'clock.
Demonetization.
Yeah, that can logically never happen for a Bitcoin.
Correct.
I get what you're saying. Okay.
Correct. And so beyond that, what was really interesting is that here, it's not really a commodity. Now, if you try to ascribe a value, today it's hard to ascribe a value of rupee, why the 1 rupee is worth what it is.
Okay.
Similarly, with any currency, it's very hard to just say, hey, it's worth it, the paper that it's written on, or, it does something. There's no backed value to it, right?
Okay.
In this case, with cryptocurrency, technically there is, which is computing power.
Okay.
The way Bitcoin works, now we talked about how credit cards verify and kind of hold the ledger such that when you're going to a merchant and handing him your credit card, the merchant knows that the money is going to come because the credit card is making sure and ensuring that, hey, Shalin has $10 in his account or 50 rupees in his account, and Anupam received $10 or 50 rupees.
Okay.
The ledger on blockchain allows for that to happen through miners.
Okay.
Now, miners are essentially, without getting again into too much technical detail, are replacing the Visa MasterCard.
Right.
So why are miners doing this? They have to spend a bunch of computing power to basically verify each of these transactions.
Yeah.
And what they're doing is in terms of a reward, in terms of compensation for these miners, they are getting Bitcoin.
Okay.
And so that is how it basically works.
Got it. So, folks, if you want to be a miner, I think that you need to buy some pretty heavy-duty computer equipment and you have to do some pretty heavy-duty coding.
Yeah.
And only then can you, would you be able to actually mine those Bitcoins? And the Bitcoins would just be stored into your hard drive or maybe in the cloud somewhere. They don't go by the, photos of Bitcoin that you see in the press. It's a nice shiny coin with a dollar sign.
Yeah.
There is nothing like that. There is absolutely nothing like that. Okay, it is just lines of code which is staying in your computer or in the cloud that you own. It is not easy to mine Bitcoins anymore. Am I right in that?
Yeah, that's absolutely right. Today, if you wanted to mine Bitcoins, you have to have massive warehouses of computers trying to break these codes to kind of mine Bitcoin.
Your return on investment could be not much at all. You could just land up making a loss.
It's very possible because at the end of the day, there's two costs even for the computing power. There's electricity and your ability to do it in a fast method.
Okay.
And so computing power then becomes kind of the commodity that Bitcoin can be valued against.
Okay.
So it has some value in the sense that today the value of computing power is huge. Today, a guy holding a smartphone can do a lot of things. Most people can now start doing entire, their day's work on the phone.
Okay.
And so the computing power has significant value, far more value today than gold does to the average person today.
That's a good comparison. Okay.
And so there is some value to the computing power that you're ascribing when you are buying Bitcoin.
Okay. Okay. So folks, you've got that, right? If you want to buy or sell Bitcoins, you got to go to an exchange. The exchange will take care of creating a wallet. The exchange will take care of your cold storage. And I also think that you don't have to buy one entire Bitcoin, right? Because I just saw on Zepe, for example, that
0.0000001.
So you could go as low as $1,000.
Yeah.
If you just look at the fraction of a Bitcoin that you can buy out there. So you don't have to spend 3,87,000 rupees or whatever is the current rate. You can just go in for a fraction of that. You can buy it. You can keep it, right?
Yep.
So I think I want to wrap this up with the utility of Bitcoins in India. Where are we right now? Because from what I know, I think cash is still a predominant way of transacting. You've got cash and then you've got credit. I think wallets are essentially a different way of dealing with their own cash. As cash could be through a bank, could be through a debit card, could be through a wallet, whatever it is. But cash is still predominant. And then you've got credit cards. You've got a lot of other things. Where is Bitcoin right now in India as a mode of payment?
I think Bitcoin as a mode of payment, frankly, is not being used today.
Okay.
Largely as an investment is the primary use. But that being said, even India as a Bitcoin destination, compared to other geographies, we're a very, very small slice.
Okay.
Which to me is surprising because if you think about the kind of theory and the hypothesis behind blockchain and Bitcoin, the places where it would be most effective are places where there's not much banking, there's not much digitization, and a lot of things are still happening offline, which happens to be India. And for whatever reason, there hasn't been much of an uptick, but I do think that over time that will change. Today, even if you go to places where Bitcoin is well received at, whether you're buying a home or whether you try to go to a restaurant,
that happens in the world, is it?
It does.
Wow,
that doesn't mean that every restaurant accepts it. There's if you go to San Francisco, for example, you'll find far more restaurants that will accept Bitcoin.
So how do you transact out there? So let's say that you go to a Starbucks. Let's not say Starbucks. I'm sure that I guess that they wouldn't. So let's go to a coffee shop which accepts Bitcoins. How do you transact out there?
So for me, I would go on to my Coinbase wallet.
Which is your mobile phone.
Which is my mobile phone. I would kind of scan the restaurant's address. And that money would be deposited to the address after the miners have verified that I actually have the money on the blockchain and then sent to the merchant.
That's very similar to how we use digital wallets out here. Like, let's say that if there was a brief time after demonetization when there was this big jump in the use of digital wallets. So a lot of vendors, a lot of kirana shops, a lot of petrol pumps had that code out there. So I would take out my mobile phone, I would scan the code, and boom, that's it. It's done. So that's similar to Bitcoin, right?
Yeah, except the only problem with the wallets is that they are still charging some transaction fee.
Right.
Whether it's to the merchants or to us. So I think in most cases these payments are being charged on both ends. I think if we spend, I think it's over 10,000 rupees on Paytm, there's a charge. And on the merchant side, I think it's 20,000 rupees or something of that nature.
And Bitcoin, there's nothing.
with Bitcoin, there's still nothing.
My only problem in all this is that if your phone runs out of power, or there's no electricity, or if Skynet attacks, or Terminator comes in and kills all of us, and there's nothing at all, then Bitcoin, digital wallets, kuch kaam nahi hoga. Cash will still be there.
I fully agree.
Cash and coins will still be there. That's always, that's always a situation that we've not yet handled. Maybe there'll be a day when mobiles will never run out of battery, and maybe that's where Bitcoin will come. My last question, Shalin, would be, if I'm someone who wants to really learn about Bitcoins as an investment avenue, because the people that I've spoken to so far, their eyes are really wide, because they said, from where this value was and to where it's become, it's gone up for 10 times or 100 times. I don't know what the number is. But if someone sits down and says, okay, listen, I'm here in India and I want to learn more about Bitcoin and I want to invest in it, what do you think he should do? What are the 2-3 things that he should really do?
Yeah, so I think from a value perspective, whether you should invest in Bitcoin or not, it's similar to whether you should invest in Reliance stock today, right?
Exactly.
It's not very easy to kind of speculate on what the value will become. Yeah. That being said, it's clearly something of value, and if you have the liquid cash, I would really recommend anywhere from 5 to 10% of your value kind of being in this riskier asset class or currency.
Sure.
Just like you would hold, maybe a few lakhs of cash at home instead of it all being in the bank.
Sure.
You would probably hold something like this in a digital wallet.
Okay.
I think if you kind of consider things beyond Bitcoin, today there's tokens of all sorts that are kind of being created on a regular basis. Now, not all of those are currency.
Okay.
And that's something that today most people don't really understand, is these tokens may be holding value and they may be volatile in terms of their value, but oftentimes there's some that are kind of meant for storage, for example. So this token will give you X number of terabytes of storage on somebody else's computer, and so that token will hold value in terms of storage. Some may be doing other applications. So what you have is, these other applications being built on blockchain, which is the technology.
Sure.
But for a variety of applications, currency is only one of those applications that sits on the technology.
Okay.
And so I think if you look at kind of the 5 largest in terms of market cap, those happen to be the ones that are also more currency driven apps.
Right.
So that's Bitcoin, that's Ether or Ethereum. That could be Bitcoin Cash, which was kind of a split from Bitcoin. There's Litecoin and there's Ripple.
Right.
But most of these, so for example, Ether, Ripple, some of these are focused more on other applications. So Ether, which is the second largest after Bitcoin, is actually a more specialized version of currency. If you kind of were to explain it, which is in that it's a smart contract instead of just a mechanism for payment. So you can attach a smart contract to each token instead of it just being monetary value. And so with each one of these, the reason I was very excited about Coinbase is that they're not focused on only Bitcoin, or they never were. They always felt that there's going to be a version 2.0. And as cryptocurrency evolves, what ends up happening is that Coinbase can manage any type of cryptocurrency and can create wallets for any type. And so Ether, which is more also doing smart contracts, for me in my mind was almost like a version 2.0. And there's other types of cryptocurrencies that can do things that Bitcoin today can't. For example, they may be able to transact faster. So today it takes, more than a couple of seconds. If we gave the restaurant example, if I opened up my Coinbase account and gave you the restaurant money or Bitcoin, it would take more than a couple of seconds to verify that you received it. Some of the other currencies, cryptocurrencies, are much quicker. And so that has to do with block size, that has to do with the underlying technology. And so today, if I were to recommend, somebody that is keen on investing, I would definitely look at it much like a mutual fund or something of that nature. An exchange-traded fund would look at it, which is buy a basket of these things. Because it's very difficult to assess a value for each one individually. And I would also not, I would definitely say, look, 5 to 10% makes sense, just because it's a very volatile thing. And so if you need the money back out in tangible form, you may want to just be aware of that when you're investing in these things.
Right. Folks, that's a wrap on this Paisa Vaisa special episode on cryptocurrencies, on bitcoins, and a lot of other things. I'm your host, Anupam Gupta. You can reach out to me on Twitter at B50. My guest on this 2-part series has been Shalin Shah, who can be reached on, LinkedIn or?
Twitter, LinkedIn.
What's your handle on Twitter?
Shalin S. Shah.
Shalin S. Shah on Twitter. You have any questions, do reach out to him, reach out to me, and have a good time investing in bitcoins. Thank you for listening.
Thank you for listening. If you have any money-related questions, you can tweet to us at IVM Podcasts or email us at paisavaisa@indusvox.com.
No material on this show should be considered as financial advice. The material on this show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
एक्सक्यूज मी भैया, एक्सक्यूज मी।
बोलिए मैडम।
मेन्यू में क्या है?
मेन्यू में सीन अनसीन है, पॉडकास्ट है, ऑन कोर्स है, साइरस है, मेड इन इंडिया, रीडिस्कवरी प्रोजेक्ट, एम्पावरिंग सीरीज, सेक्स वैक्स है, IVM लाइक्स है, सिंप्लीफाइड है, कीपिंग इट क्वियर है, थिंग्स एंड डेस्टिनेशंस है, माय नेबर जकरबर्ग है और द फैन गराज है। आपको क्या चाहिए?
एक बार रिपीट कर देंगे क्या?
रिपीट नहीं करता हम। आप जाओ IVMpodcast.com पे और सुनो ये सब, या फिर डाउनलोड करो उनका ऐप, सब आपकी उंगलियों पे।